where will gold prices go now? So gold prices have once again risen to an all-time high, hovering above the $2,950 per ounce level on Thursday, thanks of course to continued concerns over President Donald Trump's tariff threats. Spot gold is at about $2,951 per ounce as of Thursday, after hitting $2,954 earlier on Thursday itself. This is the 10th record high this year, according to Reuters. So gold prices, traditionally a safe haven asset in times of wars and I guess in times of world leaders who cannot make up their minds, has gained about 12% this year. All eyes are now on the $3,000 mark, which is something brokerages had projected last year itself, but more for later in 2025. On Wednesday, President Trump said he would announce tariffs related to lumber, that's wood, cars, semiconductors, and pharmaceuticals over the next month. He's already imposed a 10% tariff on Chinese imports and 25% on steel and aluminum. Meanwhile, there are concerns over rising inflation in the United States, reinforcing the Federal Reserve's stance to hold off on further rate cuts. I reached out to Kunal Shah, Vice President and Head of Commodities Research at Nirmal Bang Commodities, and I began by asking him how gold prices were looking globally and then on India.
Gold prices have run ahead of its expectation. We were expecting gold to test $3,000 somewhere in the second half of this year. But just in 1 month and 20 days, we are seeing this price. So unbelievable rally in gold. A lot of reason attributed to it. And we feel that this rally has more steam left right now rather than just expecting, a nominal return. Gold in a current environment where we are seeing unprecedented debt levels of US, where if you look at the US balance sheet and you overall US debt and the amount of debt which is going to mature this year, $9 trillion is the debt which is going to mature this year. Already US 10-year bond yields are at 4.5%. And you look what is happening is you have no idea how they are going to service this debt and how they are going to repay this debt. So this is a big problem going forward. And the implication this has on the US dollar is extremely negative going forward. So irrespective of what Mr. Trump is doing right now, the inflationary expectations are surging in US. So on one side, what US actually needs is an easy monetary policy or a money printing in order to service their debt. And on the other side, the inflationary expectations are moving up. So how they are going to service their debt and how they are going to bring those yields down and pump more money in order to repay those debt and service those debt. So it's a very, very, whatever noise, what we are hearing from Mr. Trump, it seems like more of a diversion than the actual problem. And gold right now seems to be in the safe place and it is going to do well going forward. The entire economic power is shifting from west to the east and west is not able to tolerate that. And that's the reason why gold is behaving the way it is right now.
Right. And how are you seeing the outlook? Okay, let me ask you another question. So, what are the various factors that are driving up? One is traditional demand, including, let's say, from countries like India and China, but the newer demand, which could be central banks, that's one. So, what is driving it? And secondly, how are you seeing domestic outlook in India?
There are various factors, like you rightly said. The most important factor which is driving gold demand is the central bank. Okay, central banks have been buying 1,000 tons of gold from last 3 years. But that's not, the number 1,000 ton is not important. The reason why central banks are buying gold is at the core right now. And that is basically driving the gold prices. The central banks are buying gold because there's no alternative available right now for them. What are the alternatives central banks have in order to protect from the massive currency devaluation which may take place in US? What are the alternatives central banks has in a scenario where the Russian assets were freeze 3 years back by US? So there is no way the central banks are not going to buy the dollar bonds or they are not going to go back to the dollar. So here, the only thing which is left for them is gold. They are not going to buy anything but gold. And that's the narrative which is being played. Second reason, inflationary expectation. There are two possibilities. Trump really sticking to what he has said and comes up with the aggressive tariff plan and he puts the reciprocal tariff. In that scenario, gold is going to go up further because the inflationary expectation will move up. US inflation will surge from 3% to 5%. And another scenario is, in spite of whatever is being happening, US comes up with massive monetary easing in order to service their debt, in order to repay their debt. In that scenario, the dollar will collapse. So there are two roads going forward, as per me. So we are entering into a very dangerous phase. And that is driving gold demand. Because of tariffs, the parity of gold is being completely distorted. Gold is quoted 40 at a $40 premium in New York as compared to London. So the entire equation, traditional equations have changed. The London vaults are getting empty. All the gold is going back to US and physically going back to US. And so entire equation of gold, the physical market of gold, the equation is changing. And that is very bullish going forward in a longer run. So already it has run up by 8 to 10% in the start of the year. There can be a small bout of profit-taking correction, which will keep coming whenever you see a news like Russia ceasefire happening. There will be profit-taking correction, but still, it is going to provide refuge to central banks. It is going to provide refuge to investors. And I remain constantly very bullish about the overall outlook. And for next 2 to 3 years, I don't see any reason why it should crash.
Right. What about domestic prices? How are they looking to you in the near future?
So the domestic prices have corrected on account of the domestic demand has gone down by 15 to 20% on account of higher prices. In India, it is holding at 86,500 as of now when we are talking. So there can be a small profit taking which can take prices to around 84, 83,000. But I see again, gold is going to do well. What is going to happen with the Indian rupee? That remains key concern. So if the rupee is going to appreciate further or depreciate further, that is going to be the key thing to watch out for. And if the dollar is crashing, then rupee should ideally strengthen. So the gains on the domestic bourses shall be restricted by the weakness in the US dollar and the strength you can see in next 3 to 6 months in the Indian rupee. And that shall take gold prices in India to somewhere between 88,000 to 90,000 rupees on the MCX. So we remain very positive for next 2 to 3 years for gold.
Kunal, thank you so much for joining me.
Thank you. Thank you, sir.
Meanwhile, the action in the gold market or the intensity of it, something Kunal just referred to, is causing other problems in unexpected places, according to a fascinating report in Bloomberg. And this is as much a story of global trade as it is about interesting logistics. So keep listening. In London, teams have apparently been working hard to dig gold bars out or retrieve them from the Bank of England's vast underground vaults in the heart of the city. The reason? The bars have to be delivered to traders because while trades can be initiated on computers, bullion bars have to be physically moved in such large volumes that it has now exposed severe logistical bottlenecks in the global gold market, according to Bloomberg. So the bank's vault keepers are apparently busier than they've ever been in years. And while, on the other hand, logistics companies are obviously strained and refineries are packed with orders to recast gold bars from London into a form that can be delivered into the US futures market. Gold bars are flying around. More than 20 million troy ounces, worth about $60 billion, have entered the depositories of New York's COMEX exchange since the day of the US presidential election. That's November last year, with much of it originating from the London gold market, which is also the world's largest. The Bank of England holds about 420,000 gold bars, and January saw the biggest outflow since 2012. Remember, India too has had gold stocked in these vaults and has been slowly bringing them back into India. Staff apparently dug out about 8,145 bars, averaging 370 per working day, but then there is a backlog. So all of this is taken in armored trucks operated by firms like the Brinks Company, which also, by the way, moves valuable cargo in India, from the bullion yard at the back of the bank to airports outside London. But, says Bloomberg, rather than flying directly to New York, they first diverted to refineries in Switzerland to be recast into smaller 1 kilogram ingots that can be delivered against futures contracts on the COMEX exchange in New York. More chaos ensues there because the new ingots have to be registered and stored before being dispatched again. Well, moral of the story, I guess, apart from gold, maybe look for stocks of companies who are transporting it. And given how things are going, we will be seeing